I'd now like to welcome to the floor Barry Murphy and Kieran Leddy, who are both working in the Audit Quality Unit. And they're here today to talk about some of our ongoing Audit Committee initiatives and to give the results of a recent materiality survey undertaken by Audit Committee chairs. So Barry, over to you.
Thank you, Kevin. Good morning, everyone. This session of this morning's briefing will focus on the work of the Audit Quality Unit. I will give the results of the 2020 audit inspections. I will speak a little bit about a new initiative we launched in 2021, where we interviewed a number of audit committee chairs. I will then talk a bit about a new audit committee questionnaire that we were involved in. And finally, my colleague Kieran will give an overview of the results of a recent materiality survey that was carried out amongst audit committee chairs. So 2020 was the third round of inspections, and it was the second year the firm-wide inspection reports were published. There were no significant changes to the format or content of these reports, and similar to the previous year, they included both the results of our review of each firm's system of quality control and the key recommendations arising from our reviews of individual audit files. As it currently stands, there are 7 audit firms within Ireland that carry out the audits of public interest entities and are therefore within IAASA's inspection remit. This is one less than the previous year, and this was due to one firm resigning from their PI audit clients. IAASA uses the Common Audit Inspection methodology when carrying out our inspections, and this is a work programme used by a number of European regulators. We also continue to monitor our risk matrix in order to ensure that we are capturing an appropriate sample of public interest entities for our inspections. So what is the current shape of the PI population within Ireland? So this chart demonstrates that there has been a small drop year on year, although it's interesting to note that between 2020 and 2016, there was a 50% drop in the overall PI population, whereas as can be seen from this chart, the constriction remains, although it has stabilized somewhat, and there has been very little movement year on year, with the exception of some of the listed debt entities. Looking at how this impacts the audit market itself, Big Four audit firms still account for the vast majority of audit fees earned from PI audit engagements, although it's interesting to note that non-Big Four firms now account for 25% of the total PI audit population, i.e. the number of PI audits that are carried out. And the main PI audits that are being undertaken by non-Big Four firms are predominantly the debt listings, although there are some exceptions to that. So this slide sets out the results of the 2020 audit inspections, and we have also included the 2019 results for the purposes of comparison. So 87% of audits inspected received a grade of either 1 or 2, indicating that the quality of these audits was of a good standard. 2 audits inspected were assigned a grade of 3, and there were more substantial issues detected here as part of our inspection, and 1 audit was assigned a grade of 4. We would emphasize that the above results represent a small sample of the overall PI audit population, and the conclusions about the overall standards or the overall quality of audit in Ireland cannot be drawn from this sample. One of the most common findings arising from our inspection was in relation to IAASA 220, which is the auditing standard which relates to quality control. Our inspections detected deficiencies with both the review carried out by the engagement partner and also the engagement quality control review. So this is the additional quality control review which is required for public interest entities. And our inspections detected instances and issues with this review failing to detect issues with the quality of the audit work performed. So my colleague Martin Kelly has already talked about some of the issues that we detected in relation to ISA 701. And we did detect a number of findings in this area relating to a failure by the audit teams to document the rationale for the key audit matters identified. And in some instances, a failure by the engagement team to communicate the key audit matters to those charged with governance, including audit committees. So in relation to the inspections, one of the new initiatives we commenced during the year was our interviews with audit committee chairs. So we see this as an excellent opportunity to engage with audit committee chairs who are sometimes a section of the market that we don't always come into direct contact with. The main emphasis on these interviews were to understand the engagement between the audit committee and the auditors, and to get the audit committee chair's perspective on the performance of the audit, what worked well, and if there are any constructive points for improvement. We think it's important to note that these interviews were not an assessment of the work of the audit committee and are focused instead on the work of the auditor and their interaction with the audit committee. So the outcome of these results was very positive in that it was clear to us that there was frequent and open communication between the audit committees and the engagement teams. And this was right from the planning stage and risk assessment stage of the audit all the way through to completion. It was also apparent to us that in a number of instances, the audit committee had challenged the engagement team on the appropriateness of the significant risks and key audit matters identified. One thing we did find interesting, however, was that not all audit committees had read the audit firm's own transparency report or the IAASA Quality Assurance Review report. So we would emphasize that these reports are freely available and they are an important and useful source of information about auditors. So our plans for 2022 are to continue the rollout of this interview process to all public interest entities. So in the current year, our sample selection focused on the large equity listed PIs. So we'll now look at the wider population going forward. Another big initiative that we are currently involved in is a new audit committee questionnaire, which is currently being rolled out across Europe. This is an online questionnaire which consists predominantly of multiple choice questions, and there are 34 questions in total, which include questions on the interaction between the audit committee and the board, questions around independence, which includes a number of questions on the provision of non-audit services. Where the audit has gone out for tender during the period, there are questions on the audit selection procedure and the criteria used by the audit committee in selecting the new audit firm. There are questions around how the audit committee monitor the audit and questions around how they engage and interact with the engagement team throughout the audit process. And finally, there are questions on how the audit committee monitor the financial reporting process. We would strongly encourage any audit committees requested to complete the survey to do so, as their questions are based around the legislative requirements for audit committees, and they include a number of practical examples within the questions of how you can and should be fulfilling your responsibilities as a member of an audit committee. If any audit committee chair watching is interested in completing the questionnaire, please feel free to reach out to us after the presentation and we can provide you with the relevant links. I would just like to emphasize that these questionnaires are confidential in nature. The responses and results will be aggregated and no individual responses will be made public. So at this point, I would like to hand over to my colleague Kieran, who will take you through the results of the recent materiality survey that was conducted amongst audit committees. Thank you.
Good morning, everyone. Today, I will give you a brief overview of a recent survey sent out to audit committees on materiality. Again, to ensure everyone is up to speed, I will talk about the concept of materiality at a very high level before looking at the results of the survey, and I'll finish out with some key messages for audit committees on materiality. IAASA was asked by the European Group of Audit Regulators, the CAOB, to carry out a survey on materiality in audits during 2021 for audits with year ends in 2020. The objectives of the survey were to provide stakeholders with an explanation of the concept of audit materiality and how it affects the scope and extent of the auditor's work, to provide stakeholders with an overview of the current practice at the largest firms, and to collect the views of audit committees on the concept and application of materiality and their interactions with the auditor. To start, as a quick refresher for everyone, I will quickly run through some of the fundamental principles of materiality. Auditors apply the concept of materiality in planning and performing an audit of financial statements, in evaluating the effect of identified misstatements on the audit, if any, and in forming the opinion in the audit report. A misstatement or a number of aggregated misstatements are considered to be material if they could influence the economic decisions of users of the financial statements. The auditor's determination of materiality is a matter of professional judgment, and determination drives the scope, the nature, and the extent of the work the auditor performs. Materiality is initially determined at the planning stage of the audit. Auditors will determine overall materiality, performance materiality, a clearly trivial threshold, also known as an audit differences reporting threshold, and if deemed necessary, a materiality level for particular classes of transactions, account balances, and disclosures. Overall materiality is the amount over which it is anticipated that misstatements would influence the economic decisions of users of the financial statements. Generally, auditors determine overall materiality by selecting a relevant benchmark, such as profit before tax, revenue, or net assets, and applying a percentage. Auditors consider a number of factors and apply professional judgment in determination of the appropriate benchmark and the percentage to be used. Performance materiality is an amount less than overall materiality. The lower materiality is to allow for the risk that there may be several smaller errors or omissions that have not been identified by the auditor. These smaller items could be material when aggregated, so the performance materiality level is set to capture these. The clearly trivial threshold is the threshold set by auditors below which misstatements are deemed trivial. Misstatements below this threshold are not accumulated by the auditor and not recorded on their summary of misstatements unless they consider them important from a qualitative perspective. It's important that audit committees understand how this threshold is applied and, if necessary, agree on certain classes of misstatements below this level which are required to be reported to the audit committee. A clearly trivial threshold is calculated as a percentage of overall materiality. In practice, this is set at 5%. While not widely used, the standard allows auditors to determine specific materiality level for specific classes of transactions, account balances, or disclosures. Areas where this is commonly used include related party transactions or director emoluments. The table in this slide shows, in percentage terms, the benchmarks used by auditors to determine overall materiality for audits included in the survey. As you can see, net assets was comfortably the most commonly used benchmark. There are a couple of factors driving this, including the industries that were part of the survey sample and the impact of COVID-19 on PBT levels of entities, which as a result, entities favoured a more stable benchmark such as net assets in 2020. 38% of the surveyed entities changed either the benchmark used or the percentage applied to determine overall materiality. As part of the survey issued to audit committees, we asked for their views on the most suitable benchmarks for determining materiality in their audit. We did note a couple of instances where the benchmark used by the auditor differed from the benchmark considered most suitable by audit committees. In these cases, what is most important is that there was discussion on the benchmark chosen and agreement between the audit committee and the auditor. Questionnaire responses do indicate that these conversations are taking place, which is encouraging. The table in this slide shows the percentages applied or the percentages applied to the chosen benchmarks used to determine overall materiality in audits included in our survey. As you can see, the percentage applied to PBT and revenue benchmarks was pretty consistent across all audits. In terms of the net assets benchmark, the range of percentages applied was pretty wide across the surveyed entities, including when looked at on an industry by industry basis. The next couple of slides set out some of the initial observations and findings from the survey. In general, audit committees' understanding of the materiality concept is strong, and in most cases, audit committees do place moderate or high importance on materiality, including in consideration as part of the audit proposal process. Materiality discussions are taking place at the planning stage of the audit and throughout, and audit committees are generally satisfied with the materiality levels being used by the auditor. We have, however, identified some areas based on the survey results where audit committees could benefit from a deeper understanding within materiality. Audit committees should ensure that they understand the factors that were considered by the auditor in setting materiality, specifically in relation to the determination of the percentage applied to the chosen benchmark to calculate overall materiality, and in determination of the haircut percentage applied to calculate performance materiality. Audit committees should ensure that they understand how the auditor uses performance materiality to determine the extent of their audit procedures. And audit committees' understanding of these areas and other areas within materiality would, in general, benefit from a more clear and concise communication with the auditor and enhanced discussions in relation to materiality. In the next couple of slides, we have set out some of our key messages for audit committees in relation to materiality. The section sets out a number of questions that audit committees should ask themselves in relation to materiality, as well as questions which can help drive conversations with auditors in relation to materiality. In the interest of time, I don't propose to go through this section in detail now. The slides have been or will be made available to participants after this session. If I were to pull out one key message from this slide, it would be the top line there. Basically, it says, have you understood and challenged the basis for the materiality level set? This slide here sets out a couple more of the key messages for audit committees, which again, I won't go through in detail now, but you're free to digest at your own leisure. And finally, in terms of next steps, we plan to publish a thematic review of materiality in audits before the end of the year. This will provide an Irish perspective on materiality and will build on the initial observations that have been set out in this slide deck. This will be published on the IAASA website as well as on our social media channels. Furthermore, the CEAOB will be publishing a thematic review on materiality, aggregating the survey results across participating jurisdictions. I don't know the exact date that this will be published, but it will likely be Q1 or Q2 of 2022. Thanks for your time. I will now pass you back to Kevin to introduce the next session.